and take Greg from South Haven.
Hey, well, good talking to you, sir. I got a question. As far as everybody's 401ks and stuff are down, and if you've been in this, let's say, for 20 plus years, and let's just say that you're down 100,000 from this point from the beginning of the year, or the 12/31. Is it just a deal? It's never good when you contribute more than what your earnings are, which are you lost money. Are you just still one of these, and I'm 50, so I'm still in it for the long haul, but is there a time when you think that get something safer out there or would stop contributing to a 401k?
So your question's about 401k. You're saying hypothetically you're off about 100,000. You're about age 50, I heard.
Yeah.
Okay, so you're still planning to work for a while. How far out do you think you might be going?
Let's say maybe anywhere from 10 to 15 years.
Okay, so you've got a pretty good time horizon. Let me give you a stat here as well. When the S&P 500 closed at 3667 this past Thursday, the index was down 23.6% from its all-time high of 4797 set on January 3rd. Qualifying as a bear market of at least 20%, the drop was the index's 11th bear since 1950, but its second since the start of the global pandemic. Let's look at one other stat connected to that. After suffering 10 separate bear markets between 1950 and 2021, the S&P 500 recovered and eventually achieved a new all-time closing high each time. The average length of time it took to retrace its steps from a bear market low to a new closing high was 25 and a half months, or a little bit more than 2 years. The quickest recovery for stocks took place in just 3 months in 1982, while the longest took 70 months, or about 6 years, and that was between 74 and 80. So your time horizon exceeds any of those historical scenarios right there. And we've had, since in the past 33 and a third years, we've had 20% declines in the market. The next 12 months after those events, the market has averaged a 17% upside. So what all those stats tell you is you have time on your side, Greg, because you're saying I'm going to probably work another 10 to 15 years. The market's going to be higher, history tells us. So now it's subject to how are you investing? Could you make adjustments? Could there be more downside? Yeah, there could be more downside. I think the market over the past 170 years has lost more than 30%. I think that's about 12 times. So if it does, we know that's a long ways for it to come back up. So if you're buying and you're still adding into your 401k, your dollar cost averaging, so you are putting money in at these lower values. So what of your 401k, what's the percentage that's in stocks?
Say about maybe 20%.
Okay, so the rest are kind of in bonds.
Right. Well, let's say a little bit more, maybe upwards of 30%, and then the rest of it pretty safe, some bonds and such.
Okay. Well, with that said, and you've got 10 years to go, what is that the way you've kind of always done it, keeping that low amount, or 30% in stocks?
Yes.
Okay. Well, one thing is, I'd say it's kind of discounted at this time. We have no guarantee of the future, Greg, but history tells us this does come back, and you are adding money. You might not want to adjust your portfolio, but what if the contributions you're adding each month went to the stock side, maybe, because you're buying it lower, and we know over time that's going to get higher. maybe adjust and rebalance a little bit more into stocks since they're discounted, since you're looking 10 to 15 years out. You could take advantage of the discounts and then adjust more conservative. With that said, we could well have more downside, and coming out of this might take 2-3 years, maybe more. But I do think we have more pain. I think there's probably some more downside, but I also look at that as opportunity, something to consider in your decision making there. Any other questions?
I appreciate it.
Okay, awesome.
I appreciate it. Maybe I'll try to give you a call, your office, maybe sometime next week. Talk to you. Thanks a lot,
awesome.
Man.
Awesome. So Greg said he's going to call my office. That number's 5048329200. The website's gregoryricks.com. The email to that office is info@gregoryricks.com. For the listeners, I've got 4 offices out there. We're in Baton Rouge, Louisiana. We're in Mandeville, Louisiana. We're in Metairie, Louisiana. And we're in Gulfport, Mississippi. Okay, the other 48 states, I'm sorry, but we've got Zoom, telephones, video meetings. We help people across the country. So with that said, there's one number to call if you're looking for some help, and that's 5048329200. And it starts with a conversation. And you don't have to become a client to get help.